Hello and welcome to this real quick basic introductory video to the Crossfire strategy. I'm going to share my screen and show you how I get this strategy set up in advance. So you should now be able to see my 15-minute chart for the British pound versus the New Zealand dollar. I'm recording this after the event, but I'm going to play you through it. So this last candle here was a 5:45 a.m. candle UK time, and that candle is now completed. What we're interested in is a 6 o'clock candle. Now, in preparation for the 6 o'clock candle opening and closing, we simply draw two lines on the chart. One above the current price and one below the current price. I'm going to change that one to green because that's going to be my buy line, and the red one is my sell line. Now, I'd already highlighted the time area that I'm interested in, so that's 6 o'clock, 6 a.m. to 8 a.m., and that focuses my attention on the time span that I'm looking at. Now, when this 6 o'clock candle closes, when it opens and closes, we're going to position these two lines accurately. So I'm just going to move on the replay here and just show you the 6 o'clock candle appearing. So there it is, and we stay with it until the 6:15 candle appears. So that's the 6:15 candle, which is literally just started. That's the 6 o'clock candle, which is opened and closed. We can now position these two lines. So what I'm doing is, you can see that there's a wick at the top of that green candle there. I'm looking left and I'm looking for the nearest higher high. So that one doesn't count because it's the same height as that one. So I'm going to position the candle to the second one to the left, and that will be there. And then I drag this one down so that it touches the top of the wick of the 6 o'clock candle. Okay, I'm going to do the same with the bottom of the 6 o'clock candle. You can see the wick there. I look left and I can see that this candle here is the nearest lower low. So I'm going to drag that to there, not that one, the next one, and then simply touch the bottom of the wick of the 6 o'clock candle. So you can see the two lines are actually touching the top and the bottom of the 6 o'clock candle. Now we're all set to go. We're now at 6:15, and what I do is I change from the 15-minute time frame. So on the 15-minute time frame, each one of these candles represents 15 minutes. I'm going to change to the 5-minute time frame, so each candle represents 5 minutes. And the other thing that I'm going to do is I'm going to add the Ninjacator, which is a piece of software that we use in our group. And you can see that what that's done is it's placed what we call a ninja up at 6:20. And what we're looking for is, whenever we get a ninja up, we look for price to be above the green line. Now, at the minute, it's not above it, it's straddling the green line. If we got a ninja down, we'd be looking for price to come below this red line. Now, neither of those situations have developed yet. So I just look at these charts and wait for a definite move either above the green line or below the red line. But in the meantime, I'm looking at two other things on this chart. You see this orange line here and this blue line here. Those are what we call moving averages. The orange line is the average of the last 50 candles. In this case, they're 5-minute candles. So the last 55-minute candles, the average price has been at that orange line there. And this line here is the 200 moving average. No, it's not. I've got that wrong. It's the 800 moving average. It's actually a purple line. I just spotted that the blue line is there. It's more or less where price is now. Now, these moving averages are quite important in this strategy. So I'll just go over that again because I got really confused there. We've got a 50 moving average, it's the orange line. We've got the 200 moving average, which is the blue line, and we've got the 800 moving average, which is the purple line. Now, what's going through my mind at the minute is if this price, if we get another green candle and price heads up towards that 50 moving average, we talk about bounce or break. And that means that price is either going to bounce off that line or it's going to break through it. And the third option is it might bounce off it and then break through it. So I would be wary about getting into a trade until price got beyond that orange line. Some people might take a trade, but I'm a little bit wary and I'm going to wait until price gets above that orange line. And what I think might happen once it gets above that orange line is it may well go to this purple line, and again, it'll bounce or break. So what I'm looking at doing right now is measuring how many pips there are between that purple line and the orange line. And I can see that there are 27.8 pips to be had once price moves above that orange line before it reaches, or by the time it reaches the purple line. So I go for 10 pips a day. Looking at that, I can wait until price gets above the orange line, get into the trade and quite easily grab 10 pips out of that move there. So let's see what happens on the day. Just move it forward slightly and then I'll pause it again. Now you can see at that point, we have another green candle here, but can you see how it's bounced off that orange line? So I was right to stay out at that point. I'll move it on another candle. There, you see, price has actually bounced off the line. So bounce or break, and in fact, it bounced. Now, if you got in, you wouldn't be too worried at the minute because it hasn't moved a significant amount down. But I would avoid that. I would wait until price got above the orange line. So just wait and see what happens now. Now price is going to head up any second now. Just bear with us. You can see it's starting to go up, and I'm going to pause there. You see we've got a new ninja up, and price is above the green line, but it's actually straddling the orange line. So being ultra cautious, I wouldn't get in, still wouldn't get in at this stage. As I say, some people might get in, but I would wait until the next candle appeared. And there we go, we've got another candle, and you can see that price is actually moving quite rapidly now. So this candle was above the orange line, started above the orange line. This one was quite definitely above the orange line. Now, I would have got in for a trade on this candle here, and I would set my take profit at that line there, or just slightly below it. So I will be waiting to see what happened. I'm pretty sure price is going to bounce off that purple line. Sometimes it takes a while. Now you can see the top of that candle has just hit. I'm going to stop it there. There we go. So on this candle here, which is a 735 candle, price actually hit the purple line, and I would have got out of that trade at that point. I would have, if we do another quick measurement just to make sure what we've got, let's say I got in on this candle here, or even in that, let's say we got on that candle there to be absolutely safe. The bottom of that candle is at that level there, and we go up to where the price is positioned at. That's 22 pips. I'm happy. That's me done for the day, and it's only 7:35 in the morning. Now let's just play that out and see what happened. Now, price has gone through our purple line, but now it's starting to retrace. It's coming back down, and in fact, we've got a ninja down. So we did the right thing to get out, and I'm going to stop that there and say that is the Crossfire strategy in action. That was just one pair on Thursday morning. There are 4 pairs that we can use the strategy on each morning, Monday to Friday, and there are 5 pairs that we can use at 1 p.m. Monday to Friday. So that's my basic introduction to Crossfire, and anyone got any further questions, please contact me, direct message me. I'm going to stop the recording now. Thanks a lot. Cheers.